So this is John Duncan. Today we're going to be talking about bike tariffs. So basically what happened was the EU has accused China of illegally subsidizing their bike production, and this means that since China has pumped a bunch of money into their bike market and production, it's easier and cheaper for them, and they can export more bikes. And this is a problem for the EU because EU is the biggest bike consumers in the world, and China is the biggest exporters of bikes in the world. So this really hurts the EU domestic producers because it's cheaper to import bikes than it is to produce them locally. So then the demand for the export bikes is higher than the demand for the demand for the imported bikes is higher for the demand of the local domestic bikes, and this puts this is a problem for the producers because they're not making as much money as they want to. And we're going to talk about this through our tariff diagram, as you can see in the background here, and Duncan will further explain what will happen in the tariff diagram as the EU puts a tariff on the bike imports as a result of this subsidy, so that they limit the amount of bikes coming in, and that also benefits the local producers, and the government also clips off a little bit of revenue there as well. So Duncan will explain the rest of the diagram.
Since the Chinese have decided to subsidize their own bike production, the EU zone and those governments there have decided in retaliation to do a tariff on these imports to even the playing field and to increase free trade. And they've done this, as can be seen on the diagram, increasing the price with a tariff from P World here to P World plus a tariff. And before the tariff, the imports would have been between Q3 and Q2. But now, because of this tariff, the price has increased to this point here, and as such that has increased the propensity of domestic producers to increase a higher quantity of bikes, and lessens the imports also from the fact that because of the higher price, domestic consumers are willing and able to buy a lesser quantity of these bikes, and this brings the imports to between Q0 and Q1. And because the extra above the price world for these imported bikes goes to the government, and which is the tariff times the quantity of imports, then the European governments get this quantity of taxes and increase their tax revenue. And since this is increasing their tax revenue, evening the free market playing field, and having the Chinese pay for a useless subsidy, this in a sense could be seen as a good thing for the European government.